are Realty Income. We're also called the Monthly Dividend Company. We invest in net lease real estate. We've been a public entity since 1994. We trade under the ticker symbol O, and we've been in existence for close to 55 years. So, REIT is basically a fancy way of saying that we are allowed to invest only in actual real estate. And REIT is really a tax elective that has certain conditions to allow us to be passive investors in real estate. And this is a way for a retail investor to own a piece of Bellagio, for instance, without having to worry about, what is the total cost of a Bellagio. So that's really the advantage of being a REIT. And, we were essentially built on the basis of this transition that we are starting to see, where companies want to be asset light. They want to focus on their operations, but they needed a relationship with a landlord that could be a long-term relationship that could end up owning the actual real estate on a very long-term lease. That's how we were founded. Glenn Bell, the founder of Taco Bell, reached out to our founders, William and Joan Clark, and wanted them to develop the first Taco Bell because they couldn't get a bank loan to help develop it. And so they put a very long-term lease together. They created the first Taco Bell in Northridge, California, and that was how the business was founded. The second piece that our founders were very focused on was, look, they raised the capital through friends and family, retail owners. And they said, you have expenses on a monthly basis. We are collecting rent on a monthly basis. We are going to give you a monthly dividend. Thus, the whole concept of the Monthly Dividend Company came into the fore, and we've been giving monthly dividends for the last 55 years. I think the biggest trend that we are starting to see is a lot of operating businesses are starting to recognize that having a lot of real estate on balance sheet is not really being valued by their investors. So for an instance, a 7-Eleven doesn't trade based on the number of convenience stores they have on balance sheet. They trade based on what is the EBITDA that they're generating or net income that their operating business is generating. So that creates this funnel of product for a company like Realty Income to come in and say, we want to become your long-term real estate partner. We love your business. We think it is a great business regardless of the economic environment. And we will help monetize your real estate, enter into a long-term lease with you, recognizing that, at the end of the day, you're going to be better off having a balance sheet light business model, and we'll have a relationship with one of the foremost convenience store operators in the world. But their thesis always is, hey, a particular location may no longer work. These are long-term leases. Trends change, retail parks move, demographic shifts could result in changes to what is required within a particular geography. That's where diversification comes into the fore. We have over 15,500 assets. We are in all 50 states here in the United States. We are also in the UK and 6 other countries in Western Europe. And we are exposed to 90 different industries as we describe them. And we have asset types that goes beyond retail. So it's retail, industrial, data centers, and gaming. So that diversification nullifies the potential risk of a location that doesn't work. And that is the biggest strength that we bring to the table. Just look at our history, and it's a lot easier to follow us as a public company. And when we've been a public company for the last 30 years, we listed in 1994. The one factor that I point to, which we are so proud of, is from an operational return perspective, we have never had a negative return. So you talk about fundamentals. If you look at the dividends that we share with our investors, and you look at the earnings growth and you add those two things that we control as a business, we have never had a negative return in the last 30 years. That is the reason why we've been able to give more than 600 consecutive quarters of to dividend and dividend growth. We are part of the S&P 500 Dividend Aristocrat Index. We are an S&P 250 company in terms of size, and we've talked about diversification. Those are the reasons why one should invest in Realty Income.